Welcome back. It's time for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back with more with John O'Connell. He's Chairman and Chief Executive Officer of Davis Ray and our featured guest of the morning. Off camera, you and I were chatting about your concerns about the Canadian consumer. For years now, we've been reading about household debt levels in Canada rising. Successive Bank of Canada governors have really not succeeded in convincing Canadians to take it easy on their household debt. Now we've got interest rates at their highest level in years.
Yeah, I think, it's interesting when we talk to clients and investors and we raise this concern about the elevated levels of debt in the Canadian economy. They say, oh, yeah, the government. And I'm saying, well, the government of Canada actually is one of the few places that actually has a AAA credit rating. Yeah. Better credit rating than the U.S. government does. It's borrowing money for less than the U.S. government does. But Canadian consumers are twice as indebted as Americans. And when you say that to people in Canada, they're shocked and go, oh, no, the Americans are worse safe. No, they went through their purging back in 08, 09. Yep. Canadians continued to borrow because they thought they were just superior, I guess. And they've now put themselves into a situation where we've had this shock. We had the first shock during the pandemic where people weren't able to work. And everybody said, well, Canadians can keep paying their debts as long as everybody has a job. And then theoretically, nobody had a job for a while there. And the government said, everybody gets a timeout. You don't have to pay your debts. The bank gets a timeout in terms of not being able to say you're not paying your debts and putting it in default. And consumers racked up even more debt during the pandemic, whereas Americans paid it down. So now we're in a situation where people have a job, which is great. Immigration is growing, which is great. But GDP per person is declining. And Canadians have a large amount of debt, and they're clearly having problems. The Canadian bank regulator, OSFI, passed rules that come into effect in January, whereby banks are going to have to reserve more capital for Canadians that have negative amortizing debt, which means basically that the interest and the payments they're making every month are actually not enough to keep the mortgages from keep increasing. So that's going to make banks very unhappy because they have to put up more capital, less profitable. That's not what they're paid to do. So my sense is that there's going to be a lot of pressure on consumers to pay down debt. It's not just the higher payments that they're making, it's actually the banks want them to pay down their debts. Their lines of credit, which are demand loans. Banks can make you pay them back if and when they want to.
Can that, we're almost out of time, can that contribute to a Canadian recession?
I think Canada's in a recession right now, and I think one of the things that investors should be thinking about is when the Bank of Canada starts to cut rates and they blink, and I think that will be fairly soon, probably early in the new year, they will throw the Canadian dollar under the bus. The interest rate differential, Canada's already borrowing a lot at rates much lower than the Americans are. When they start to cut rates more aggressively than the Americans do, the Canadian dollar will fall, and I think you can see the Canadian dollar go down into the low 60s. It's around 74 right now. We could go back to where we were back in the early 80s when it was called the Northern Peso. It wouldn't shock me, and I think investors need to be thinking about that's kind of...
That's John O'Connell.